So as you can see, there's a global aspect to this event that's always really refreshing, especially the startup count. So I'm really pleased to see that. You never know who you're going to be sitting next to here. So make sure you get to know people, make those connections. One of my favorite pieces of last year's event, which I think is great that they're leading with it, is the investor panel. So I'm about to introduce a panel of investors who are going to share with us the perspectives and just their thoughts on where travel is today. Obviously, where we are today, it really pushes us forward into tomorrow. So these perspectives matter, especially if you're looking for money. By the way, you don't have to raise money, I'm just saying. Sorry, guy, JetBlue, I'm sorry just for saying that. No, I shouldn't have said it. But, if you're looking for money, and even if you're not, sometimes it's good just to know the landscape and how people are seeing the industry and where it's headed. So with that, I'm going to introduce our moderator, Matt, from Travel Tech Incubator. He's going to come out. I'm going to introduce everybody one by one. So hopefully, the Pandora's box. There we go. Hey, Matt, come on out. I feel like I should have a prize wheel or something. I don't have a prize wheel. Next, we have Christina from Jetblue Technology Ventures. Yes. Amir from Plug and Play. Although I think I'm doing it in the wrong order of the seats. Amir, don't sit in this next seat. You got to skip a seat. So
I'd like to sit next to Christina.
Follow your picture. Yeah, because that's just going to be too confusing. So Mark, you're next from Thayer Ventures. And Susanna, finally, from Amadeus IT Group. All right, I'll leave it with you.
All right, thank you, Nick. Welcome everyone to the Future of Travel. Wow, we've got a big crowd this year. Is the second year. Excited to be back. Thanks Tigre and Pam for having me back to moderate the investment panel. We're just going to do brief introductions of everybody. We'll start down here with Suzanne and we'll work our way back and then we'll kick off with some questions.
Hi everybody, can you hear me? Good. My name is Susanna. I've been running Amadeus Ventures for the last 5 years. So we are the corporate investment program of Amadeus IT Group. We focus on travel. Yeah, nice meeting you.
Amir?
Pleasure to be here. Amir with Plug and Play. We have been around since 2006, primarily for the mission of investing in startups across 15 different industries, one of them being travel and hospitality. And we also work with about 300 corporations to help them on their digitalization and innovation roadmaps.
Hi everyone, my name is Mark Farrell. I am a partner at Thayer Ventures, a firm that I co-founded back in 2009. We are an early stage technology venture fund with a sole focus on travel and transportation. So very germane to what we're doing here, and my personal background was an attorney, then investment banker, before co-founding Thayer, and also spent some time in politics, and culminating last year actually served as the mayor of San Francisco for 7 months. And happy to be back in the private sector.
Good morning, everyone. I'm Christina Hege. I'm here representing Jetblue Technology Ventures. We are the investment arm of JetBlue Airlines, as you probably heard from Bonnie about a few minutes ago. But we look to invest and partner with early stage companies at the intersection of travel and technology. We've been around for 3 years, just a little over now, I think. And we just hit our 22nd investment, so it's been a busy 3 years. Excited to be here.
And I'm Matt Zito with Travel Startups Incubator, and we invested in 21 travel tech startups pre-seed incubation level. We started in 2014. We currently run 2 programs. We run a traction program. It's a 9-week online virtual advisory and mentoring sort of investment preparation program. It sort of teaches you how to build a company in the travel experience based on all the experience that we've had in investing and working with companies. And then we have a corporate innovation program where we bring together startups and corporates to do pilots and licensing. And we'll actually have an event at Amadeus on April 30th. If anyone is interested, just reach out to me on that. We're connecting startups that have B2b technology with the larger corporate players. This session is about investments, so we'll just kick that right off. We'll just talk a little bit about the investments that you guys have made that you've made lately, the amounts that you invest. I think it's important for some of the startups in here to sort of know where everyone sits in the investment stage. And what does a really good deal look for you? And I mean, maybe you can talk a little bit about your methodology and how you decide what to invest in. So I'll just open up as Susanna, if you want to start.
Sure. How does a very good deal look like? So last year, like we were not as fast as we wanted to be, but we closed one new investment, one follow-on, and we are at the moment closing 2 more new investments. So we are quite busy and very excited about year 2019, looking forward to doing more deals. And when we are looking for new deals, like there are a few elements in it. That you probably have heard a lot about a good team. That's like the fundamentals. We look for very good people who not only know about the new technologies that they're bringing into our sector, being very open-minded in terms of learning from people in the industry, etc., but be persistent and very proactive in terms of reaching out to potential customers, etc. Good people, very reasonable valuation. From my part of the world that is easier to find. I'm based in Madrid, in Spain. As you are aware, like valuation in Europe, it's just a little bit lower than in the US. Last but not least, I would say great collaboration opportunity so between the company and the startup. So if we hit on an area that internally we are already talking about it, to say, like, if we can find a startup that is going to help us to solve this problem, it's going to be great. And if we can find that fit, like, it's the deal, yeah, the most ideal deal that we look for.
So we primarily invest on the business-to-business side. We shy away from business-to-consumer for various reasons, especially in travel. We invest anywhere from seed up to Series B. And last year for the travel program, we did 7 deals. Some of them were actually done with the folks you see on stage here. And what do we look for? Echoing what you heard already, I think the team is the #1 factor, especially when you're talking about earlier stage deals. There's so many variables that goes into a startup scaling, going from a seed round to Series A to Series B. Hopefully the one thing that stays constant is the team, and how cohesive they are, how driven they are, how open they are to pivoting and solving a big problem in a big market. And then after that, we are a little bit chicken before we write a check. So we have accelerator programs at Plug and Play that deals with 300 corporations. So every 6 months, we run an accelerator program for travel and hospitality, and that entails sitting down with about 26 corporate partners, understanding what digitalization and innovation opportunities they're looking at. And then ultimately, with the help of corporate partners, we enlist about 20 startups in each accelerator program. And throughout the 90 days that the accelerator program is ongoing, the corporate partners have an opportunity to do pilots, proof of concepts, licensing deals. In the case of Jetblue, that's looking for investment opportunities. Some of the corporations may be looking to make investments into startups. So that's a long way of saying if we introduce somebody to Jetblue or Delta or Accor Hotels or Carlson Wagonlit through the accelerator program or one-on-one introductions, and they end up doing business together, that's a great signal for us to be an investor in that company. So I would say the accelerator programs and interaction with our corporate partners helps us make better investment decisions and validate a technology that has legs and can actually generate revenues.
Mark?
So at Thayer Ventures, we are generally Series A investors. We've done a few seed deals, we've done a few later stage deals, but that's really our wheelhouse. We like to put about $1 to $2 million to work at a minimum in our first investment, and then we'll follow on along the company's ride, assuming the company continues to do well. And I think it's important for us as Thayer, we've co-invested, by the way, with everyone on this stage in different deals. To our knowledge, we're still the only early stage venture fund with a pure focus on travel and transportation. And for us, what that means is we also love partnering with other funds. And so we work really well in the sandbox with a lot of everyone here on this stage, but also a lot of the other kind of typical venture funds that you've seen in the Valley and corporate venture arms as well. I think, I'll echo what everyone has said about kind of types of deals that make a difference in terms of team and so forth. The one thing that we look for additionally is to make sure that Thayer Ventures, that both us as investors and our investor team, but also our LPs and our funds can add value to the company. So we have, investors in our funds include hotel companies such as Marriott and Hyatt, but also a lot of individuals, CEOs of many airline companies or ex-CEOs and hotel groups and restaurant groups. And we want to make sure that it helps us do our diligence in a company, but also once we do invest, we play that outsourced really business development, sales and strategy engine for our portfolio companies. We want to make sure we put our pedal to the gas and really want to make sure that we drive growth. And so long as we can find that, that's the additional kind of step that we take at Thayer that makes it important for us.
It's neat to hear the similarities. For us as well, at the early stage, we look at investing around the Series A and the Series B check sizes of about 1 to 3 million. We'll do some seed below $1 million, but generally that's where it fits quite neatly. It's particularly when we look at the corporate partner that we support. And a Series A company has its product, is looking at scaling to the market, and that's a really nice time to start introducing them to JetBlue, either for a near-term or a mid-term kind of pilot. Which actually is one of the things that we also leverage when we're looking at investing to determine if it's that good deal. And we have a wealth of knowledge because we have a lot of airline experts at our corporate partner. And so there's a really neat way to get to vet both current problems in the industries, inherent challenges to solutions that are proposed, and potential fixes, which is really great. And I think there's nothing different. We all agree on kind of the team and the traction. And I think the other thing is kind of the market indicators, right? And we've alluded to that, but one of the big signaling effects is who else is interested. And so, having these 3 partners that we've invested with on stage is a great sign for us to show, yes, this resonates, not just within our team, but also across perspectives.
Yeah, and then I would say, when we invested in the 21 travel tech startups, we were pre-seed, so we put on average like $25,000 in each company, at the idea stage, very early. And I would say for everyone out there, reiterate, if you look back on our 11 companies that are active, and we believe probably close to 7 of them are going to be active, successful companies in travel tech. The interesting thing for us is that the majority of them are all B2B. We had a lot that were B2C that then went into B2B, but our winners at this stage, the average company is like 3.5 years old, are B2B. I don't know if that's just happenstance, but on the team side, what does that look like? So our successful companies have a minimum of 2, sometimes 3 founders. There's an engineer, there's a business person, there's a financial person. Like those 3 segments across each team was visible. Where we failed and on the investment side was a lot of individual owners, individual founders they're outsourcing their technology, they weren't building it themselves. So, if you're doing a travel tech startup and you're a business person, you need an engineer to be successful to build your product. And so if you can learn from that, that's sort of what ours look like. Let's talk a little bit about the state of travel technology investment today. We have some VCs here that are 100% into travel tech and they're focused into that, but there's just really not a lot of us really, and why is that? And then let's also talk about the challenges of B2B versus B2C, because everyone here is basically a B2B investor. I think that's their target. And so let's talk about the challenges of that, and then also why is there not more dedicated Thayer Ventures that are just focused VC investors in this space? It's the fourth largest industry in the world.
Yeah, I can start by saying something about travel tech, which is not a term that has a consistent definition, so I would say, across the investment community. Because when I talk to people about travel, immediately people believe this is something to do with bookings, so online. But for Amadeus, given our current business, we are still a very significant GDS, but we also have a very substantial airline ID business, so we have hospitality. So the type of technology that we are looking for, can be relevant for online, offline travel agent, but even more so for an airline, full services carrier to low-cost carriers, to a hotel, from the IHG, so worldwide chains to independents, to airports, regionals and nationals, and even payment. So the range of technology that we actually look for, like with such a range of customer segments, so everything is relevant for us, like from AI for IoT, from fintech, insurtech. So we actually cut across most of the technology subjects per se. Maybe address a little bit of the B2B and the B2C questions. So for us, obviously, we want to be able to find startups that are working on problems or challenges of the industry that we can take to our customers. And in this case, so we are a little bit more biased towards the B2C ideas, because those are the things that we feel that we can add more value to the startups. And at the same time, as I coming back to so probably jumping a little bit on the financial VC side, financial VCs, they look for the next unicorn. With a B2B positioning, like being a startup, you need to get to a place where you believe that you can be the unicorn. Is your business model scalable enough? Is your target market size big enough, to make it attractive for a financial VC? So I think that those are the few questions that we see, so in terms of why the B2B, B2C questions and why there aren't maybe as many financial VCs in the travel space, is they're looking for that unicorn. And as long as there is a unicorn opportunity, they would jump onto it.
So Amir, are you looking for the unicorn?
What's that?
Are you looking for the unicorn?
I think we're all looking for the unicorn. There's, going back to your question, there haven't been that many success stories in the travel industry when you're talking to venture capitalists that invest across multiple industries. They traditionally have been burnt a lot with travel companies. There's been a couple of success stories, especially in North America, but not many. So from the plug-and-play perspective, even though I'm exclusively focused on travel, when we look at how fast these startups scale across the other 14 industries, take supply chain and logistics, take health to a certain extent, take fintech, insurtech. Travel industry is a slow-moving industry. I think when you look at the airline industry, when you look at hospitality brands, it's an extremely cash-rich industry, which makes it a lazy industry in terms of innovation adoption. So when you look at the long sales cycles, with a startup trying to get its foot in the door of Marriott or Hyatt, and when you look at the ROI on that investment, when you put your VC goggles on, and you have other opportunities in other industries where things move a little quicker and startups scale faster, I think it's hard for VCs to get involved, especially at a very early stage. It's very easy for a VC to come in at Series B when the startup has already proven itself, it's scaling, and they're just looking for capital to fuel their growth. But those earlier stage deals, when you look at the opportunity cost of investing in one industry versus travel, a lot of times other industries win out in terms of supporting startups and helping them scale much, much quicker. So I would say that's the challenge. And then the other challenge is everybody travels, and everybody who travels thinks the journey that they have, whether it's for business travel or leisure travel, is broken, and they want to solve it. And the travel industry is a messy industry, and there's reasons why the travel journey is not seamless. So if you don't know the nuances of the travel industry, I think a lot of entrepreneurs end up going after opportunities that on the surface seem like could be businesses, but end up failing.
Mark?
Yeah, so from my perspective, from our perspective, I think the travel industry simply has been really resistant to the adoption of technology over time. It was literally the advent of the internet and the emergence of the GDSs and then the OTAs that came in, and now you have the displacement of the OTAs and their trading multiples and the tension versus the suppliers in the space. That continues to create a lot of friction, but it's really been the last 20 years when technology started to invade the industry. And even a few years ago, big hotel corporations were competing, who had the better in-room experience and who could tear down the blinds with their little remote control iPad or what have you. They didn't see alternative lodging and Airbnb and all the derivative companies coming around the corner. Now, next year, it's 20% of room nights globally. That's a mortal threat to that industry. And so companies are starting to, and I would agree totally with Amir, but what I also say is if you look at all of the trends, whether it be dollar inflows from a venture perspective, whether it be M&A exits in the industry, and we're starting to see a few companies about to file to go public this year, that were incubated as venture investments in the space, you're starting to see a trend of a ton more activity. And so that's the last 5 years have really ramped up in the industry. So I actually think historically, horrible place. Now, an amazing place to invest. And you're starting to see, again, a lot of, especially the suppliers and a lot of other folks that are the actual acquirers of these companies take notice. But also to Amir's point, and the reason we built an independent firm solely focused on this industry was because there are so many nuances to this industry as well. You know, we've seen many property management systems try and go after, you know, Aloha product that was owned by Micros and now Oracle, but they were always going to attack Marriott or IHG or one of the big chains. We kept saying no because we thought if you're going to go elephant hunting, you're going to lose. When we found an investment in Prague that was going after small independents globally, and the company's now in 40 countries and doing incredibly well. So it takes a lot of nuance, I think, in this industry to do it well from an investment perspective. And I'll quickly mention your B2C versus B2B comment. Look, the advantages of B2C companies, you can scale quickly, you can become a unicorn in a year, and that's great. The challenge is it could flop just as easily. And so, you know, we at Thayer Ventures, we invest mostly in B2B companies. A number of our companies do have consumer exposure. We had an investment in a company called Hipmunk that we sold last year, and a few other ones. And the trick about B2B, though, is, of course, if you do it right, it's a very sustainable business, but it takes longer to incubate. And so you're going to have a much longer track record, and investors have to think about not only cash-on-cash returns, but in IRR, so internal rate of returns. And if it's a company that's going to take 7 years to get to scale, that becomes a lot more challenging for investors to invest in. But where we see ones that can scale quickly from a B2B perspective, those are the ones that we get excited about because we think that's the best of all worlds.
If I had to sum up, I think what we're saying on the panel is a looking back scenario and sort of the state of the industry. There were and still are three core issues to the travel tech space. One is legacy tech infrastructure, right? GDSs and a lot of the supporting tech infrastructure was built in the 50s and 60s and still exists today. Second, it's a risk-adverse culture, and in many ways, that's good. You don't want the really risky personas running your airlines, for example. That's a positive thing.
True.
And then third is then looking at the disaggregated or decentralized decision-making. Hotels are a perfect example of this. They're all little fiefdoms, and there's 3 different deciding factors for every single hotel: the owner, the brand, and the manager, right? How do you get anything done in that scenario? That's really challenging, and I think Mark described it quite well when he was looking at kind of the change over the past kind of 20 years or so with the rise of digital and e-commerce. So if we're looking at the current state today, I actually think there are probably 3 really good indicators. One, we have new success stories, right? For North America, that's Airbnb and that's ride sharing, which often gets lumped in. Those are some very big dollars that a lot of the venture capitalists are kind of salivating at if they didn't get in on it or did and want more. 2, we're having a new wave of investors as well, right? We have less, you know, some of those that got burned in the dot-com bust of the travel industry are now in the retirement phase, and there's a new wave of capital and human capital that are looking to invest those dollars. And 3, we as an industry know we can no longer just stand by the wayside and let things happen. And I think we've learned from kind of the dot-com existence when OTAs sprang up because, you know, at least hotels, you know, speaking from the hotel perspective, we're like, oh, websites, who needs websites? Well, that's where we are today at, you know, 10 to 25% margin getting taken. So we now no longer know that. Now it's still, I think we're post the cusp of the change and we're seeing that ramp up, but I think we have to continue to do more and more of it, particularly through partnerships to continue to make that change.
And I'll just sort of sum it up what they already said. So there's a lot of travel tech startups here in the audience. The B2B to B2C challenge, the only thing we would advise the companies that in our portfolio and also the companies that come through our traction program, we teach them a lot on the B2B side, is you're better off making, what we've seen is you're better off making your decision to pivot to B2B sooner than later. And it takes a lot of cash to do a B2C startup. You can move, like Mark said, you can move much quicker and scale quicker, but you need a lot of cash to execute that. And the only downside of the B2B is, yeah, you can build a more sustainable model, which I think, you know, as investors we like that, but it does take a really long time, and there's literally, you know, 12 to 18 months sales cycles, so it's a very long cycle. We talked a little bit about, you know, the B2B in the past. Let's talk about the future. We have a little bit, about 7 minutes left in our time. There's 10 startups presenting here. 6 or 7 of them are from around the world, which I'd love to see that. Talk a little bit about the trends that you see, new technologies you see that interest you. What are you looking at? What gets you excited? Are you investing in companies outside the US? Let's just talk, we'll finish up on that.
We'll start on this end, so we can actually switch up the order a little bit.
Switch up the order.
Variety for the audience. Great. So I'll start with a little bit kind of the geography piece and looking at expanding. So for us, when we started 3 years ago, we were very US and North America centric. And as we've grown and started to expand, we're now looking to, as well, kind of expand overseas as well. And part of the foray for that with us has been through a partnership program. So early last summer, we launched a formal partnership to work with travel suppliers to then be able to partner and send startups their way to then for them to really pilot and work with our portfolio companies with the base theory that the last thing we need is every supplier to have an investment arm. But what we do need is we need everyone at the same table. And so for us to be able to share and open up the portfolio companies that we're working with other partners is an amazing way for the industry to get scale and innovation, as well as for us to get a better return, because more clients means more money. And so that's a foray for us as we start to think about really expanding internationally, and is something we're really excited about. If we take a pause and think about kind of the next 5-10 years or so, from technology perspective, there's a few different areas that I think we're specifically looking at. One, I think we'll continue to see the personalization of the online experience as we start to actually get all of our customer data in a single place, have it leverageable, be able to then personalize that online pathway. I think we'll still continue to see some significant challenges to do that in the offline world, but hopefully we'll be making progress there. We also look at the changing nature of regional travel. So for us, the sub 1,000 mile market is one that's the most likely to be disrupted from legacy carriers. So that can be electric vertical takeoff and landing, eVTOL. It can be innovative new models like luxury buses. It can be a whole range. It can look at regional airports instead of the main ones. And we think that will really shift how we look at last mile, first mile and last mile transit, as well as perhaps even the modes of transport. And then my third and final one that I'm always excited about is voice. We're seeing, the low-cost, low-risk products shift to some voice-based search and then voice-based purchasing. Once we get into the high-risk, high-cost, which is what travel always falls into, it's always kind of the last adoption, we'll continue to see that, which means we need to start thinking today about how we aggregate that data as a supplier to prepare for that.
So to add on to that, so at Thayer, we definitely do look globally now. Similar to JetBlue's evolution, we've been predominantly North America focused in our prior funds. With this fund, we have an investment in Europe. We're just about to close our first investment in Southeast Asia. And at the end of the day, travel is global by nature. And so we are going to continue to see amazing companies in those jurisdictions, in India as well, and across different continents. So we're going to continue to look at that. I would say for us, we realize that we are 3 partners based in San Francisco, and so if we do invest internationally, we want to make sure we have a strong partner on the ground that we invest in, generally another venture fund or someone else that's really leading that investment, but where we can add a lot of value. And in terms of themes, technology themes, I think we could all be up here all day. I would say 2 categories, not necessarily technology themes, because as Susanna said, every technology theme, whether it be AI or mobility or everything, hits the travel industry. For us, 2 buckets that we continue to be very excited about, among others, alternative lodging. So these are derivative models, not based upon Airbnb, but think about vacation rental. And the way we think about the space is, where do you sleep when you're away from home? So it's not just vacation rentals, it's business travelers as well. We've had some very successful companies in that space, and we continue to find some really amazing models that are innovating that space around the world. And then also generally transportation, whether it be last mile or in micromobility. If you think about, and I say this as the former mayor, you think about our roads right now. I mean, we have Uber and Lyft and ride hailing. We have all the delivery companies, the FedExes and the UPSs. We have all the prior places where we used to go shop, the Safeways, the grocery stores that are delivering to you now. We have all the scooters and the bike sharing companies, and we have all these other, DoorDash and all these other food delivery companies. I mean, our roads are more crowded than ever before, and that's just fueling a desire for change and innovation. Right now, 55% of our world's population live in cities. By 2050, that's estimated to be 70%. So the growth of urban mobility challenges and innovations, I think, is going to last for a long time to come.
Hey, Amir?
So yes, we do invest outside of North America. Just to put some numbers out there, last year, Plug and Play globally invested in 200 companies. 120 of them were based in North America. The other 80 were scattered between Europe, Asia, and Latin America. In terms of, by the way, geographically, the markets that are becoming interesting for the travel industry as far as the startups are concerned, I would say China, very interesting in terms of the number of unicorns you're seeing out of there. And then Europe is becoming more and more relevant these days with a number of big funding events that took place in 2018. But in terms of themes, personalization, everybody talks about it. Very few people do anything about it, I would say, across hospitality brands and airlines, but definitely an area that we're focused on. And if you had to break up the airline industry into one category and the hospitality brands in the other category as far as travel is concerned, I would say on the airline side, we're very much focused on ancillary revenues, technologies that could help someone like Delta or JetBlue provide services outside of transportation and safety, and basically help increase the revenue per passenger, if you will. That's something we're very much focused on. In terms of hospitality, and by the way, for both airlines and hospitality brands, personalization is on top of mind. That applies to both buckets. But in terms of hospitality, we're focused on true loyalty innovation, meaning we think the existing loyalty programs are very old, and I don't know of a single person who's in a loyalty program and is happy with it. So how do you build true loyalty and not lock people into these legacy loyalty programs? And I think technology and innovation can play a big role in the coming years.
Christina?
I have 30 seconds. For Amadeus Ventures, we definitely invest globally. We invested in Spain. We invested in Israel. We're working on a French deal right now. Being a global company, that's the only thing that we are not afraid of. We're very open in terms of legal jurisdictions, etc., because we have business all over the world. In terms of things that we are excited about, I would say, like last year, we've started to see a lot of very practical application of AI. Those are all very exciting, like from flight delay prediction, like Lumo, your company, to application of facial recognition, emotion recognition, to say how to apply those in hospitality environment, airport environment. So a lot of experiments and trials going on. So that is an area that we are definitely paying a lot of attention to. And then the next thing, like echoing Mark's remark, is urban mobility. Like with all these options coming out, like for both travelers and like residents, and traditionally being a GDS, a distribution company, like we start to think what is our role, like in this world of multimodality. So how do we connect travelers to all these last mile transportation options, but at the same time, linking like local residents with travelers as well, and extend it from the urban mobility standpoint into even smart cities. So we're close to a lot of the what we call the destination management company or local tourism boards. I'm sure that you have heard of the term over-tourism lately. So there's a strong growth in terms of travel around the world, and we are seeing a lot of tourists concentrated in a few big cities. How can we actually use data analytics to help these tourism boards to be able to manage the traffic? So is it around digital advertising, being smarter in terms of acquiring the type of travelers that you want, and even pushing the boundary into how can we actually engage the local community with the traveler? How can we help them to actually do more businesses with the travelers, such that everybody can benefit from that phenomena? So those are the few subjects that we're working on.
Yeah, and I'll just take 30 seconds real quick for the travel tech startups that are here. So one of the biggest trends that we see right now in play, and because the travel industry said moves real slow, is what we'll call the platform-based business. A lot of your larger travel companies are building like an Amazon.com type of model, a platform-based business, where they're selling their own technology and they're bringing third parties in. So we're seeing right now that there's opportunity for travel tech startups to get your API or microservice or widget technology integrated with one of the larger companies. They're actually looking for this right now, and it's slow going, but we're noticing it in the last year that this is picking up place. So we call it the platform model. It's a trend that we're seeing in the industry. We're going to take some questions, I think, right now from the audience. Is that correct?
I like your comment about the widget technology, and I guess I'll address this to Mark, because you're focused on travel specifically. How would you suggest that a startup that is in the development phase approach airlines and other partners to become a widget in their platform?
I'm happy to chat about that. You have some suppliers here, though, that will probably be the most relevant to ask about, and so I don't want to punt it, but I will. Yeah. I mean, look, from our perspective, it depends on your value proposition, exactly what you're trying to do. I think you want to make sure that if you're in a development phase, just generically speaking, that when you come to a supplier that could be your end customer, that you got all your ducks in a row. You don't want to do it too early. I think you're going to blow a lot of potential leads. You're going to blow people's kind of perception of you as a company. I think when we started off our firm, we started investing in some seed deals and so forth, and we realized pre-revenue companies that we weren't very good at that. We're less technologists at our firm, more about the applications of technology to the industry, and so, where we start to get comfortable introducing portfolio companies or potential companies to our supplier relationships, whether it be airlines or hotels or restaurants or other players in the industry, is people that actually have a product up and running, that have some traction with customers and so forth. So, I mean, that would be my main suggestion, but if, I don't know, Susanna, Christina,
yeah, and I think
ones.
I think with we were going to talk about piloting and testing. We didn't get to that question, but you have to approach one. You have to have your technology ready to go to pilot. You can't be in beta. You have to be live, ready to go to pilot and test, and you have to approach the travel companies. You have to find ways in. Plug and Play has a program. Amir can speak to it, but I think Travel Startups Incubator, we're working with corporates. So we have a program, an innovation program, where we're going to, at the end of April, on April 30th here in Miami, Amadeus, we're going to sit down 10 corporate travel companies with 20 travel tech companies on one-on-one meetings. And what we found is that you have to get face-to-face. This business is face-to-face. You can do a webinar and you can do an email, but in our experience, the companies have executed pilots and licensing deals. They go and they meet with the corporate or the partner. They're going to, they either fly and meet them there, or they see them at a conference, but they sit down and they shake their hand, and that's how you have to start. That's how you build relationships. This industry is built on face-to-face relationships.
If I can just add to that, so let's say you were able to get your company inside the doors of whoever, an airline, a hospitality brand. What you should watch out for is not becoming a development house for that one entity. So it's very tempting as your first client to basically bend over backwards and do exactly what that client is asking for, and that's a really good way to kill your startup. So you want to make sure that you don't become an extension of your first client. But getting your foot in the door is not easy. I think even if you have a solution that's a perfect fit for a hospitality brand or an airline, finding the right person, getting on their calendar, that person getting other stakeholders involved, it takes a while. It's not easy.
Any questions?
Yes. I've heard the panel talk a lot about investments in North America, Europe, and Latin America, but I've not really heard anything about Africa or startups in Africa or any opportunities on the continent. Is that because you are not seeing anything, or is that because you're not looking in that space? And if so, why is that the case?
All right. We are looking at Africa. Historically, I would say we haven't, but right now we are looking at Africa. I think the entrepreneurial scene is maturing there as it relates to technology and innovation. And there are some companies that are really localized, I would say, in Africa that are doing great things there. So it is one of the markets that we're evaluating to set up plug and play shop there. But historically, we went after the markets that were, I would say, a little bit more mature as it relates to technology and innovation. It could be China, it could be Europe, but Africa is definitely becoming more and more relevant for us.
I agree. Very candidly, the investment team tends to be very small, like especially for us. And so the typical approach is you go to like the hubs, so where you can find a concentration of startups. And so typically where we start is Silicon Valley, Israel, like maybe a few more cities in Europe. For Amadeus Ventures, we have a team that is based in Bangkok, like based out of our regional office, who does a lot of scouting for us, but we still haven't done any deal in Asia Pacific. And I have to say, like Africa is definitely up and coming, like what Ami said. It's the promised land of, it's going to be a lot of innovation opportunities, say technology startup opportunities. We also have local offices there that helps. And so we're starting more and more deal flow actually coming through our local offices from Africa. At the end, I would say, as long as we can see that unique technology, the tangible value proposition for our customers, as long as we can formulate an investment story around it, it's definitely a place that we can look at.
I think there's, we actually invested in a company called Africa Bookings in 2015, and they built sort of an older traditional model, a hotel wholesaler model, and they actually just recently merged up with another company. So I think like when we looked at Africa and we saw the technology that was there, there's, I think, opportunity in Africa and India as well. There's opportunities for sort of traditional models that maybe here in the US that we would say that they're old school, because there's not a lot of technology that's we actually saw in Africa. So I would say maybe look at some inbound opportunities, like how can you bring travelers into Africa? How can you sort of build the infrastructure in Africa to deal with inbound people coming in, on the hotel side as well. But I think there's great opportunities.
Yeah, I'd just add, I'd say from a global deal flow perspective, we definitely see the strongest in North America. I'd say our second biggest are Europe and Asia, and that's kind of, those balance each other out. A little bit from India, a little bit from Israel, but to be honest with you, I mean, we've probably seen a handful of deals from Africa, and it's not for kind of, lack of not wanting to look at it. It's just reality of what we've seen across our inbox. So, but I think I would imagine you will see and hear from folks that if there's the right opportunity and the right company, people would be very open to doing it.
Next question.
My name is Denis Krasnikov. I am a partner in Drotter. This is the first in the world messenger with text, voice, and video translation to 148 different languages. And you, thank you for a very nice panel. And you said a lot about loyalty, and also you said about voice recognition. I think that this is one that speak your own language. This is one of the best way how to get the audience, because, for example, English is very good, but this is not the most spoken language in the world. If I'm not mistaken, this is like fourth or even fifth language. And do you invest in such projects? And is it interesting to make the loyalty bigger, better for this way? Thank you for your attention, and sorry for my English.
No, it's perfect.
Yeah, it's a good question. I guess a couple things that you were mentioning. Absolutely, that will be a very key feature of being able to, when I think about the impact of languages across travel, right? I think about it first and foremost from the customer experience, right? Wanting to truly be able to interact with people in the local place that I'm in and understand their lives and understand what they're explaining about their town and the country's history, et cetera. And language is often a barrier for that. And I think that can, I've seen, I've traveled with friends and they've acted as a translator in some countries, and just these stories that I'm able to learn is so much more different than when I don't have that. So yes, I think that's absolutely a fundamental aspect. When I think about who and what will drive that, my thought would be that in some ways it'll be in many ways driven by some of the bigger tech companies that are often pursuing the voice hardware and the voice software. So for me as an investment perspective, I would look at saying, where is that innovation going to come from? What does it need to ride on? What's the data set that it's leveraging? And who's best suited for that? Either a startup to big company and the spectrum thereof. And I'd look for that. And for us to invest, again, it's, okay, well, what's the impact to travel? So we'd need to see the full impact there. So.
Okay, we got time for one more question. I'm getting the sign.
I'm curious if all of you, when you started in your roles, knew what you know today, what would you have done different, especially in terms of the investments?
I'll hop in. I alluded to it earlier. I think our biggest mistake, but that also speaks to who we are as a firm and where our strengths lie, was investing in companies, kind of pre-revenue companies at the concept stage before they actually had revenue or a product that was up and running. You know, we have seen, and since we've kind of refined our investment, the kind of profile, if you will, a number of years ago, we've seen more and more kind of roadkill on this, you know, along the side of the road in that space. And I think from an investment perspective, you're going to see, as was alluded to earlier, super early stage investments in this space are very, very difficult. And I think, you know, you can make an argument, you know, later stage companies as well. But I think for us, what we've learned is that we are not very good at that, and we continue to see a lot more impairments at an early stage level in this industry than I think against most industries.
Yeah. If I can add on to that, like maturity is definitely a big learning for us. So not only on the financial side, but also on the collaboration side. So being a strategic investor, so we are accountable internally, not only to startups, but to our management team, that we need to do something with the startups, not only a financial investment, but to be able to learn something or collaborate on a project. And so that's why like initial KPIs and customers are so important, like from the startup's point of view, to prove to us that there are things that we can do together right after closing. Like we would be able to like show you to our customers immediately and to start like co-marketing and co-sell activity. And that is a big learning. So how to engage like our internal business units, so in terms of formulating and agreeing on specific projects that we can embark on with the startups, like from day one, pretty much, like after investment, because we are very conscious of like adding value. So we don't write the biggest check in the industry, but our value proposition is we're here to help you to reach our customers. And so I would say that's the biggest learning in terms of where to identify the values that we can create together, and focus on those. And on those that we don't believe that we can deliver, we would rather say no than investing and see what's going to happen.
Okay, I'm getting the sign over here. Thank you very much. This has been the first session, investment panel, and have a good day. We'll see you all out there.
Thank you.